Good evening or afternoon. Thank you for taking 5 minutes or so to hear more about the Aptus story and the Collared Income Opportunity ETF, symbol ACIO in particular. My name is Neill, Institutional ETF Specialist. I am joined by J.D. Gardner, Founder and Chief Investment Officer, as well as Luke Tyner, Portfolio Manager on the derivatives side. Today, we will focus on 5 key topics for the discussion. Who is Aptus and why ACIO? What are the 3 components of ACIO? How ACIO differs from competitors? When is the strategy more or less relevant? And where ACIO may fit for advisors and consultants. First, let me read off the following disclaimer. The opinions expressed during this webinar are those of the Aptus Capital Advisors Investment Committee and are subject to change without notice. This material is not financial advice or an offer to sell any product. Forward-looking statements are not guaranteed. Aptus reserves the right to modify its current investment strategies and techniques based on changing market dynamics or client needs. More information about Aptus Investment Advisory Services can be found in its Form ADV Part 2, which is available upon request. Aptus Capital Advisors investment options are based upon the views of only Aptus Capital Advisors. UBS Financial Services has not assessed any of the investment options. And this video is for broker-dealer and plan-sponsored use only. JD, can you give us a thumbnail sketch of the firm and what ACIO is meant to accomplish?
Sure thing. Thanks, Chris. And thanks anybody for watching. We appreciate the opportunity to chat about these things. Aptus right now, we're a little over $4 billion in assets under management. We've had about $400 million of net flows year to date. There's about 20 of us involved in the business now, 8 charter holders, and our headquarters is in Fairhope, Alabama. So ACIO specifically, and this really applies to everything that we're doing, we're really trying to launch strategies that really harness volatility. So we think the traditional portfolio construction mindset is probably changed, and we think volatility viewed as an asset class can benefit kind of the way that you should be thinking about portfolio construction with a forward look. And so in short, ACIO is a collared strategy. We're long a basket of stocks for fundamental reasons. We are short calls on the individual names. The majority of those individual names we will short calls. That's effectively a ceiling. And then we are long puts, typically on the index, and those puts are a protection. So there's those 3 components: the basket, the short calls, and the long puts. And maybe Luke walk through a few details of each of those components.
Yeah, thanks, guys. Yeah, so when you think about the basket, we've got about 50 to 75 different issues. We've built the basket largely to correlate to the S&P 500. It's imperative that our hedge is effective against our underlying. When you think about the stock selection, we overlay a yield plus growth framework, and we design the basket to identify high quality companies and blend the holdings out over a growth and value basket. And that comprises about 80% of the portfolio. The other 20% of the portfolio is made up of more or less mid-cap compounder names that are meant to be held over long periods of time. Those are typically held in the 1% to 2% range, and we think that they can provide outperformance over a long period of time. Again, the basket, the goal of the basket is that we correlate to the S&P 500, but allow the opportunity for controlled alpha. When you look at the short call portfolio, we're selling calls on the individual stocks across the portfolio, mostly on that 80% basket comprising the growth and value holdings. And really what we're trying to do with the short call portfolio is provide 2 things. Number 1 is providing uncorrelated return driver from short call premium. And the other is to help fund the puts or the hedge that we overlay across the portfolio as a hedge. And how we deploy this short call portfolio is very unique in that we're writing these short calls on a weekly, bi-weekly, or monthly at the longest in terms of time frame. And so it's a very active piece of the portfolio. And we think that it will be an important return driver looking forward where you've got a choppy potential for a choppy market to persist, and the short call premium is a unique return driver that the strategy has. And in addition, we've got a long volatility portion of the portfolio comprised of an index put that's actively managed. And so the biggest differentiator that we bring to the table is we're very active with the structure of the overall portfolio and how we manage the puts. So it's not just to put a put on and sit it and forget it. It's very active based off of how the market is moving and how that put's managed. And so we think that these puts and the overall structure can offer meaningful capital preservation benefits when equity markets are falling quickly or grinding like they have this year.
Yep. Thanks, John Luke. And just to reiterate, if ACIO is a collared strategy, from JL's overview, you can see there's a lot of thought that goes into each component. One of the differences in how we're managing the strategy is we're managing to a structure, not to the calendar. So a lot of there's the typical overwrite strategy or equity collar is going to be very systematic in how it's deployed and how it's rebalanced. We manage to an upside downside capture mandate, which we expect to capture over a 3 to 5 year cycle. So our upside capture, we want to be 70-75% of the S&P, and we want to capture less than 50% of S&P's drawdown. And when you think about the importance of that, especially when you're dealing with options-based strategies, if you're managing to a structure, that structure is going to dictate the necessity to update your positions. So if you've got a hedge in place and the hedge gets too big, you need to monetize that and roll. To John Luke's, some of his color on the call options. If you can be nimble around call options, specifically when when you sell for 100 and you capture 75 quickly, what do you do if there's still time to expiration? All of these unique pieces of the strategy are operated underneath the umbrella of the structural mandate, which is, hey, can we capture 70-75% of a market that's rising and less than half of a market that's falling? That's a huge point. Now, recently we've seen first quarter of 2020, obviously the effectiveness of the hedges, that was a good proof statement. Year to date of 2022 has been another good proof statement just in the effectiveness of protecting capital when equity markets are not friendly. The worst case environment for ACIO is if the market's going to compound for 20% for the next 3 to 5 years, you probably don't want anything up top. But I think what I would stress is the way that we're creating it by selling calls on the individual names, we are effectively bumping our ceiling higher versus what typical strategies would be deploying if they're trying to take that premium from covered call overwrites and buying protection. We are selling the individual call options and buying index protection. And there's a difference in the types of vol that you're selling versus the types of vol that you're buying. And that's beneficial to just the asymmetric structure of the strategy, which is more upside and less downside. So Chris, you want to kind of wrap things up with a few use cases?
Thanks, JD. Yeah, appreciate the comments from both of you. So what we've seen so far here with ACIO is 2 or 3 use cases from advisors and institutional consultants. One has been ACIO used as a replacement for high yield fixed income, where investors may have ongoing concerns about interest rates and credit risks associated with that asset class and see us as a solution. Another one is where we're being used as an equity alternative to complement low vol or dividend-oriented strategies because of the potential capital preservation benefits from the put hedge. And then lastly, we've also seen some replacement demand for long-short equity, where we help take the timing decision out when to sell those short equity positions and also provide a more cost-effective solution for those investors who don't want their capital locked up. And thank you, everyone, for your time today and listening to the Aptus story and ACIO in particular.
Thank you.